My name is Jake, welcome to the channel, and today's video I want to talk about a couple of things. The first thing that I want to talk about is really just, about the portfolio in general, talking about dividend investing, some things that are really on my mind. I want to talk about the projected dividend income that the portfolio here is supposed to generate here in 2022. So I'm going to talk a little bit about that, as well as I want to talk about how my wife and I's net worth has kind of evolved and gone up over these last couple of years. So really it's a different video that I've been doing the last couple of months. If you've been following the channel for a while, like if you go back on some of the videos that I've shared here in the past, they've been very specific to specific topics. They've been very educational, and really the goal has been to educate on a specific topic. This video, I just want to kind of rant. I just want to kind of talk about, dividend investing in general, share some things that are kind of on my mind, and just really just have a deep and personal conversation. That sounds really weird, so don't get creeped out by that. Just a casual conversation about dividend investing. The way that I kind of think about it is if you were sitting in a room with me and we were nerding out and talking about dividend investing. Now, obviously you're not in my room. That would be awkward. You're sitting somewhere, maybe here in the US, Canada, Europe, wherever you may be. I just want to have a conversation with you and kind of share, some things that are on my mind when it comes to dividend investing and really, financial independence as a whole, because that's what it's all about. If you clicked on this video just for the purpose to, look at, tracking dividends and, projected dividend income, I will leave a link in the description below so you can skip ahead to that part specifically in the video, because I don't want you to click on this video and be like, okay, what the heck is this guy talking about? So if you're just interested in projecting dividend income, I'll leave a link in the description below. So dividend investing is something that I'm really passionate about. I mean, obviously I created a YouTube channel and titled the channel name Dividend Growth Investing. If you've been a long-term subscriber to the channel, you know that my wife and I's strategy has kind of changed over the years, right? When we first started in dividend investing, we were thinking, okay, we're going to try this whole FIRE thing. We don't want to work at our day jobs forever. We really want to reach financial independence. And how do we do that? And over the years, I've really sucked at buying low and selling high. I was so bad at investing into penny stocks, growth stocks, oil stocks. Like I've invested into a handful of businesses that actually went bankrupt. I thought because the price was low, the stock price was low, it meant that it was a good investment. I had to learn the hard way. And then really I was thinking to myself, what is the best approach for me personally when it comes to investing? Something that I can really comprehend and understand and, something that works for me. And it's the slow path to wealth. It's gradual dividend growth investing. It's investing dollar cost averaging every single week into your portfolio. And that's really stuck with me. When I look back in the last couple of years over the progress of the dividend portfolio, see what you're seeing here. I track everything in spreadsheets. I'm a total nerd when it comes to that kind of stuff. I use other websites that I track our progress, but kind of old school when it comes to tracking the dividend income from our cash flow portfolio. Over the last 2.5 years, our portfolio has gone up and down, in the beginning. And then just over the last year and a half or so here, since about June of last year, our portfolio has gradually gone up because I've made less and less changes to our portfolio. But when I first started dividend investing, when I watched a video from PPC Ian, 4 years ago, here on YouTube, when he was out on the beach and, doing his vlogs, like really, really funny videos. But like when I first started learning about dividend investing, I had really no idea I didn't really comprehend the power of compound interest. I really didn't understand it. Like I always knew, okay, yeah, compound interest is it's a magical thing, but I didn't really comprehend it. And so when I first was starting, my journey, if you will, to dividend investing, I kind of expected, okay, I'm on this path. I'm going to see exponential growth and it's going to, I'm going to be a millionaire in no time, right? I had no idea that it was actually going to take as long as it has, to get that snowball moving and going. And so when I first started dividend investing, my expectation was that it was just going to explode. Things were going to go great. And that I was on my path to being a millionaire in no time. Little did I know that it was a slow path to wealth. When I look at my M1 portfolio and the activities and the dividends that I've gotten, I got like 13 cents from Target. I got like 45 cents from Johnson & Johnson. I was so proud of that. But like going back to the expectations versus the reality, when I first started dividend investing, it looked a little like this.
I think I am definitely more confident this time because I've already had that first kiss out of the way. I think my strategy is just go for the kiss. Maybe I'll be able to like slip tongue, and then from there things take off, and who knows, maybe she's my first girlfriend. Can I kiss you?
Sure.
My gosh. Good times. All right. So when I think about it, so looking at here in M1 Finance, I've used so many different brokerages. I've used TD Ameritrade. I've used Fidelity. I've used Scottrade before they were acquired. Like I've used Robinhood in the past. Like I've used a lot of different brokerages, but the way that I view it is my big goal when it comes to dividend investing is you pick great businesses that you understand, and you dollar cost average into them. Now, I know when dollar cost averaging, you're going to buy companies that are maybe overvalued or undervalued, but it's not really the point to focus on the price. You're really focused, or for me, when I look at this strategy, is I'm focused on just getting as much money into the portfolio as I can and really relying on the compounding nature of the portfolio. So if I look at the portfolio here, so let's say, okay, let's go in here and let's take a look at some individual companies that I've owned here in the portfolio, right? I got paid, $56 from Pepsi here on January 7th. When I look at Pepsi 2.5 years ago, I wasn't getting paid that much. I was getting paid what? Back in June of 2019, I got 8 cents from Pepsi, right? And I didn't reinvest into Pepsi for some time, and I got 8 cents, I got $1, I got $17. And the point that I'm trying to make here is when you're first starting out and you're learning about dividend investing, you have to understand that you're going to be working in cents. And then over time, you're going to get more and more, and it's going to compound. And it's going to compound organically, but when it comes to like the company is growing and et cetera. But really, when it comes to dividend investing, if you're looking to really see exponential growth, you have to fund the portfolio. You have to transfer money from your bank account into your brokerage. There's no way of getting around it. When looking at dividend investing, you have to look at it depending on your strategy. Are you looking to retire or live off the portfolio short term or long term? And depending on those things, you really have to understand your goal. And with my wife and I, we originally thought, okay, it's going to take us 10 years to be able to amass a large enough portfolio to be able to comfortably live off of our dividend portfolio. But as these last couple of years, as we've understood different compound rates, as things in our lives have changed, we've adjusted those goals. And so just looking at a random other company, let's look at, Johnson & Johnson. Once again, 8 cents back in June of 2019. Now here in December, we got $87, right? If I look at another one like VYM, let's look at VYM. Back in the middle of 2020, we had $50 in dividend income. Now we're just under $500, right? And so the compounding nature is going to depend on the business. It's going to depend on when you're purchasing the company. And if you've been following my channel, I've had a handful of different positions over the last couple of years, right? Like I have 34 holdings right now. A handful of them are ETFs. I have SEHD, VYM, NUSI, JEPI. I think I have VPU and VGT in here as well. So a couple of ETFs, but the others are, just well-established businesses that for most people, they can understand, right? Johnson & Johnson, Verizon, Southern Company. These are the type of companies that I have in my portfolio. And this portfolio is very tailored to my wife and I's goal of reaching financial independence. We don't have time to invest all of our money into Apple and Microsoft because we want to live off of the dividend income. If we had 20 or 30 years, my largest holding in my portfolio would probably be VGT in this portfolio because of the growth that I would be getting in the compounding nature that comes with investing into growth stocks. But because we're looking to really live off of the portfolio and not sell our shares, we're investing into slow growing, boring businesses like Coca-Cola, Kimberly-Clark, 3M, Procter & Gamble, right? These type of companies where they do have an economic moat, where there is a human need behind what these companies are doing. And when I look at the funding history with M1 over the last couple of years, in 2019, I was brand new to M1 Finance. I transferred over from my Robinhood portfolio. I think I deposited like $100 just to test it out and just kind of see, okay, can I trust this, this online brokerage that's new? It's not like an established company like a Fidelity or an E-Trade. And so 2019 was really just kind of understanding my strategy of how I wanted to use the portfolio in M1. And then 2020 was about deploying more capital, getting more money into the portfolio. We took out $20,000 and borrowed, from M1 Borrow to buy a rental property. And then here in 2021, we invested, my wife and I, $140,000 into this portfolio, and we took out a handful of money to invest into real estate here in 2021, with taking out just about $92,000. So really, really interesting stuff. I am a huge firm believer of reaching fire through real estate. I've had a lot of great experiences with it so far. I've had to do all the random stuff that comes with that as a do-it-yourself landlord. But my wife and I, we've had a lot of success with investing in real estate. And here in 2022, I don't know what's going to happen. I just got a brand new job. I'm making a lot more money. I'm hoping that I can invest more into this portfolio in 2022 than I did last year. And if we go over to the real estate portfolio, if we look at the funding history, 2019, really low amount, 2020, a lower amount, 2021, a higher amount. And in 2022, I'm hoping in 2022 to invest much more into my real estate portfolio because I sold one of my rentals and I'm looking to invest the money from real estate that I sold into my real estate portfolio, right? And so getting away from tangible physical real estate and buying REITs. That's kind of been one of my strategies here for 2022. But when I go back to this portfolio, really what it comes down to is transferring money into the portfolio. That's what it's all about. I set up automatic transfers. I'm transferring over the same amount of money every single week into the real estate portfolio, into the cash flow portfolio, and even into our little baby boy's portfolio, Lucas's portfolio. And so really the goal has been, these last couple of months, we have the portfolio. We're not going to make any really adjustments to the portfolio. All it comes down to now is how do we make more money? How do we leverage real estate to make more money in our day jobs to get more money into the portfolio? Where can we cut our expenses? How can we trim expenses or stay out of consumer debt so that we can get more into the portfolio? That's really what it's been about. And I think that's going to be something that I'm going to continue to try to do. So as I mentioned, we just recently sold a rental property. So I have a sizable amount of money on the side that I'm ready to invest into the portfolio. But the challenge is that the stock market is at all-time highs. My portfolio, all of the companies that I'm investing in, for the majority, they're really at all-time highs. I don't want to lump sum invest into my portfolio right now. So I am just continuing to dollar cost average, even though I have a for me, it's all relative, for me personally, a sizable amount of money waiting to put into the stock market, but it's too high. Like I'll give you an example. When I look at, my portfolio here in Seeking Alpha, you can see the 4-year average dividend yield of each individual investment, and you can see the forward yield going, here into 2022. Really, the only companies that are trading at somewhat fair valuations are tobacco stocks. And if you've been following tobacco stocks in Altria and British American Tobacco, the last 2 weeks, they're up about 14%. So I kind of missed my window of opportunity there. They have just blown up. But leaving that aside, all the other companies that I have in here, for example, AbbVie. AbbVie was trading at over 4.5% for over a year now. and now it's trading below its 4-year average yield. You look at Southern Company. Southern Company has a 4-year average yield, starting yield of 4.5%. It's trading at under 4% right now. Like, as a utility, it's insane. Verizon is one of the only values that I kind of see, that I'm keeping a close eye on, relative to, its historical average. So Verizon is trading at a fairly fair value, in my opinion. Duke is the same thing with Southern Company, way, expensive. Pfizer, expensive. Kellogg is kind of, on its historical average. Kimberly-Clark, kind of at its average. Coca-Cola, holy cow. I would personally not buy Coca-Cola at these prices. Like, just for me right now, I just can't do it. 3M is at a decent valuation. VYM, this is off. I think this is in the twos, I think. I think it's like 2.8 or something, but I'm not, I think it's a little bit lower, but I don't know. VPU, lower, SCHD lower, Honeywell, Pepsi, they're all lower, right? You see this, like Lockheed Martin is a little bit at a fair value, Caterpillar, Target, McDonald's, like the market is just so pricey. And, we talk about, you hear people always saying, yeah, you want the stock market to go up. You want to see your portfolio at all-time highs. No, as a dividend investor, I don't want that. I want the market to correct. I want the market to go down so that I can buy into these wonderful businesses at a fair valuation. Right now, it's just really, really pricey. So that's why, for me, I have money on the sidelines. I'm not lump sum investing yet. I'm looking for opportunities. But no, the market is too pricey for me, and I'm just kind of, but I'm still dollar cost averaging, but the money from the sale from our house, I'm waiting. Another way that I view this here is I have my portfolio in Yahoo Finance, and I like to view it here because I can see the 52-week rolling average here of where my companies are at, if there's some that I want to maybe cherry pick. But something that's interesting is you have Omega Healthcare that has actually gone up these last couple of weeks. Just a couple of weeks ago, it was trading at like $27. It's gone up a lot. But what's interesting is, as I mentioned, British American Tobacco, 2 weeks ago, it was way up here. It was way down. And so this is another way that I'm tracking, okay, what companies could I potentially cherry pick and buy with the extra money that I have from the sale of the rental. But, you look at the forward annual dividend yield, some of these are attractive, kind of like Verizon, but for the most part, the market is just so pricey right now. It's hard for me to really stomach buying at these prices. All right, now I want to talk about the projected dividend income that I should be getting here from the portfolio in 2022. So if you're not familiar with this is propeller.com. I believe it's a product from dividend.com. It says it's in beta. It's been in beta for like 2 years. If you're interested, you can sign up on their website. Just Google Propeller. You can get on a wait list. I know that there's other dividend trackers out there. Some of them I don't trust personally. Some of them they're developed by developers that are kind of international, and I just don't feel comfortable giving my personal information out on some of these websites. But with Propeller, it is a reputable company. I feel comfortable signing up for it. That's why I personally am very skeptical and careful when it comes to some of these dividend trackers, because I don't want to just freely give my information away. What's pretty cool is you can link it up directly with your brokerage. So this is for the most part, in real time. It's updated, I think, every 24 hours if you sync it with your portfolio. You can see that the projected future dividend income from the portfolio is over $16,000. The dividend yield is just over 4%. This is something that I'm talking about with a portfolio being, the market just being so pricey. 6 months ago, this was at a 5% dividend yield. So right now, really, really stocks are expensive. And it's just, part of how things are. But when looking at this, you can see this is the projected income, and you can go by month. And what's cool is you can see, okay, by date, when are you going to get paid, right? Verizon, and also very important to note, you have what's called declared and what is estimated. When it's declared, the company has announced it. When it's estimated, it's really just basing off of the last announcement. And so until it's declared, it's not final, right? But it's, estimated, it's unless the company cuts its dividend or it's an ETF, the dividend income should be fairly reliable. And so when I look at February here, it's expected that we're going to get just under $170 in dividend income. JEPI just over $200. Costco a whopping $4. I think now with inflation, I could probably buy a churro. And then APD, British American Tobacco, good hefty dividend there. AbbVie, Procter & Gamble, Caterpillar, and Nusi. So the dollar amounts really reflect how much I have invested as well as the starting dividend yield, right? So I obviously have more invested into BTI and AbbVie than I do into Caterpillar and Procter & Gamble, for example. And then if you look at March, here in March, we got JM Schmucker. I always say Schmucker. I lived in Germany for like 10 years, so I have like a German accent. So I always say it with a Smucker. Honeywell, Pfizer, JEPI again. JEPI is a monthly dividend payer. I'm a big fan of JEPI. Southern Company, $116. Johnson & Johnson, $87. PPG, just under $7. You're seeing massive inflation in materials right now with I expect much higher dividend increases from PPG going forward. I just wish I had more invested, but it is what it is. Target, 3M, SCHD, one of my favorite dividend ETFs, Kellogg, Coca-Cola, McDonald's, Duke, DGRO, VGT, VPU, VYM, Nusi. These are all ETFs. And so, yeah, a lot of the money that I have invested right now, a lot of it is in ETFs that I've invested back during the financial beginning of the pandemic. I mean, so and then in April, here Walmart, Kimberly-Clark, JEPI, Pepsi, Altria Group, Philip Morris, and Nusi. So this is how I like to track it here. And the thing is I like to have it where the dividend income is spread out. It's not just all in January. It's not just all in February. And so this is one way that you can do it, but I would never recommend buying an investment just because of the dividend payout of when it pays. It really has to make sense and it has to fit into your overall portfolio and your strategy. But here looking at the real estate portfolio, the projected forward income is just over $3,000. It has a dividend yield of just under 5%. And just over these last couple of months, I think there's more value in real estate than there is in just your traditional, companies like Coca-Cola and Pepsi. There's a lot more value to be found in real estate, in my opinion. And so if we look here and let's just look at February, we got good from Gladstone, Realty Income, Omega Healthcare, and Stag. Looking at March, we got Extra Space Storage, good, which is a monthly dividend payer, Prologis, Public Storage, Stag, and VNQ. And so this is kind of how it's set up. And it's kind of cool to see, when the dividend is coming in, how much is coming in, and you can see the ex-dividend date, all the important information that you need. And if you want to go over to the portfolios, this is something that I use sometimes. I kind of go back and forth between using this and the portfolio manager from Seeking Alpha, what I was just looking at a minute ago. And then when you look in the dividend section, you can see the outstanding shares that you have. You can see the dividend yield, the payout ratio. And the thing that I like about this versus maybe other, portfolio visualizers or the view your portfolio is it's updated in real time. You can update this and you can see accurate information to your portfolio, exactly how many shares you have and fractional shares, etc. You can see the upcoming payments. It's kind of cool. So the way that I typically use it is to just kind of see, okay, what is going to be my projected income for the next month, for the next year? And as I dollar cost average into the portfolio, this income amount is going to increase. So I talked a little bit about the dividend income. I talked about how the portfolio has gone up over time. I've talked a little bit about how, looking back at the dividend that we got from Pepsi, 2.5 years ago was 8 cents. I think it's really important if you're going to be a dividend investor, unless you're retiring tomorrow and you have all this money ready to invest, you have to understand if you're starting out slow, like my wife and I did, you have to understand that this is a slow path to wealth and that it does take time. So if you're just investing into Coca-Cola and Pepsi, and you're just funding that from your day job, it's going to take you a really long time to really get that snowball working in your favor. And so what I'm showing here, this is my personal capital account. This is where I track my net worth, right? And this is more so just, there's a lot of different functionality and features that they offer. So for us, when we use personal capital, it's really just to focus on our net worth and to see, to track our progress. We don't really track our expenses. It's just, we want to see how has our net worth gone up over time. And if we look back here in the beginning of 2019, we had a net worth of about $150,000. So net worth is you take your assets and you subtract your liabilities, and that gives your net worth. And so just here, I think it was 3 years ago, we had a net worth of $150,000. And now over the last couple of years, we've been able to increase our net worth. And when I look at this, it just blows my mind every time I look at this, because if you know my story, I started out working at a donut shop. Man, I was working, I cleaned toilets, I cleaned tables after people ate their sandwiches and their donuts. Like, I can't stress it enough that this has not been my life my entire life. Like, I really started out in the service and the hospitality industry, and I was the person that greeted somebody at a grocery store. I was somebody that bagged groceries. I was someone that collected carts at a grocery store, right? And over time, I through my education and through repetition and through learning, I was able to really put my wife and I in a better financial position than when we first started. And so it's really, really important that the money here, it's been all through blood, sweat, and tears. It hasn't been through winning the lottery. It hasn't been through investing into Bitcoin and all of a sudden we're Bitcoin millionaires or whatever. It's been really a slow but fast process for us. And that's really the thing that I want to drive home here is 3 years ago, we had a net worth of $150,000. A big part of this, how we were able to increase our net worth, and I've shared an entire video on this, it's really been focusing on the basics, cutting our expenses, staying out of consumer debt, and looking for new ways to make more money, right? We invested heavily into real estate. So yeah, there's a huge part of our growth and the success that we've had here is been riding that growth train through real estate from the pandemic. A lot of it has been done from getting a new job, increasing our earned income. Every single time I've changed a job, I've made more money. And every bonus that I've ever gotten, every commission check that I've ever gotten, I'm putting it into the portfolio. Like, that's really what it comes down to. If you could see me, I'm wearing the same clothes that I've worn 5 years ago. Like, my shirt has a hole in it. Like, it's probably a good reason why I don't have my video on because I look like a scrub. But really, I'm so frugal, so thrifty when it comes to, those kind of things. I do love my chicken nuggets from Chick-fil-A. Like, I do splurge on food. I will say, when my wife and I, we love spending money on food. So that's really where the majority of our discretionary money goes to, is in food, but we don't really have expensive taste. We reuse a lot of things. We're just very, very thrifty people. But the key thing, what you can learn if you're in your early 20s, right? And you're looking at this and you're thinking, okay, what is this guy, showing me this? Like, what does this mean to me? If you're looking at this, understand that my wife and I didn't get to where we're at by doing nothing. It took a lot of work and it took a lot of sacrifice to get where we're at today. We didn't have to sacrifice everything. Like, we still go on vacation, we still have trips, we still do stuff, but it's very intentional what we're doing. And I'm sharing this because every single person out there can do this. My hope is by you watching this is really that you can do it too, right? If you would have asked me 3 years ago, like, hey, Jake, 3 years from now, you'll be here or you'll be there, I wouldn't have believed you. I think 4 or 5 years ago, I was watching, I think it was more around 4 years ago, I was watching dozens and dozens of hours of YouTube videos. I was watching videos on investing. I was watching those old videos from PPC Ian, right? Like Ian just talking about dividend investing. I was watching Graham and Meet Kevin. I was watching Robert Kiyosaki on investing and investing into assets. And I remember 3 years ago watching those, and I was just absorbing everything. I was like a sponge. I was listening to everything everyone was saying. Really, I got to a point, I had kind of an epiphany one night where I was like, I can watch all the videos in the world, but unless I do something about it, nothing is going to change. And it was at that point when I think I was watching a Meet Kevin video on real estate, right? And, I was like, I can do this. If this guy can do it, I can do it. And I went out, I found myself a realtor, and I bought a house. I had no idea what I was doing, right? Like I was asking different people and family on, okay, what they have done. And at the end of the day, you're going to make mistakes. And that's the important thing that I've learned these last 3 years is you're going to make mistakes and it's okay. And you're going to grow from those mistakes. You have to take action. And that's really what I learned over these last 3 years when looking at, how we grew our net worth. If we never would have taken action on what we were learning and what, talking about those other videos, those real estate videos, investing videos, etc. Like if I didn't take action, I would just be in the exact same position that I was 3 years ago. And the one thing that I would say that's really helped me a lot is don't have a victim mentality. Never blame somebody else for something that is going wrong in your life. Always understand, take accountability, take action, and really, understand that you might not have success overnight, and that's normal. Understand that it is normal, but the key thing here is take action. I know this was a little bit of a random, different video that I'm used to making here. I just really wanted to sit down, have a conversation with all of you, kind of share some things that are going on in my mind. If this is a type of video that you like, let me know. I love talking about dividend investing. I love talking about, my wife and I's path to reaching FIRE and some things that we're focused on and thinking about. If this is a type of video that you would like to see more of in the future, let me know. But yeah, as always, thank you so much everybody for watching. I truly, truly appreciate it. And I'll catch everybody in next week's video.
You know what? I think we're gonna be friends. Can everyone say hi to my friend? That's crazy. I just wanted to say thanks. I'm glad you came along, partner.